I'm Todd Rosenbluth, Head of Research at ETF Trends and ETF Database. I'm here with Dan and Dave of Franklin Templeton. Thanks guys for joining me. So let's talk about what's going on in market volatility. How are you finding investors? How are investors thinking about that?
Yeah, it's a great question. Certainly something that's on everybody's minds. I think in terms of an opportunity set, folks look just beyond broad market passive options, right? And in times of volatility, you actually see a lot of trading and a lot of flow. So two perceptions for us, certainly from a factor-based strategy perspective, you have folks who are looking at differentiating beyond just market cap passive and looking at other options that are more tilted towards volatility management, and then ultimately active management. At the end of the day, it's opportunistic markets like this where we see active management thrive.
So active management is a growing part in the marketplace. We're now seeing more flows into it. What are you seeing in active management?
Yeah, so active management is still just 4% of the ETF assets, but what's been interesting, and maybe it's because the ETF rule finally got passed a couple years ago, but now 12% of the flows this year are active management. So to Dan's point, as investors become more comfortable with getting that active exposure within the ETF vehicle, hopefully we'll see that trend continue.
Well, I certainly hope so. So as investors, as advisors are thinking about active management, what are some rules to understand due diligence for them to dig in a little more closely?
Yeah, it's actually really timely. We just went through a survey of a number of different market participants and what was important to them in choosing an active strategy specifically. Interestingly, cost was actually bottom of the list. Top of the list was outcome. So at the end of the day, again, they're getting back to what's going on in the marketplace, how can they solve for those very specific outcomes using products that are very specific in terms of their intention within the construct of the portfolio.
Oh, that's interesting. So another thing that we hear with advisors is they think a new ETF, it doesn't trade very much, there's risk that's related to it. Is that really the case? Did the data back that up?
It's not the case. I actually blog about it, one man's opinion, which is my newsletter to discuss it. And what we've seen is, so the short answer is no, and we've had plenty of examples of investors, newer ETFs, smaller ETFs, being able to buy much larger sizes. And we're really trying to be more thoughtful about how we talk about the metrics around it. The newest post was, don't just look at volume, there's actually a lot of ways, how close is the block to the midpoint of the spread, and other newer metrics that hopefully will get investors comfortable with any ETF, no matter the size.
So actively managed ETFs can help you in market volatility. There's a lot more trading volume that's happening in it than people realize. They can be able to get in and get out when they want to, and that they need to do their due diligence. Great stuff, guys. Appreciate it.
Thanks, Todd.
Thank you for tuning in to ETF Trends. Have a great day.